Bitcoin has seen some reasonable volatility over the last couple of days, both dumping down and pumping up. What we have seen, however, is this lower trend line being tested as support and the upper trend line having a bit of a fake out. We're going to be jumping down into the technical analysis on Bitcoin on the 1 hour, 1 day and 1 week's timeframes, reviewing where Bitcoin is and where I think it is likely to be heading next. Let's roll the intro and get right down into it. Okay guys, here we have Bitcoin. It's paired up with USDT. We're on the 1 hour Binance chart. And as I was saying in the intro here, you can see that we've got this low trend line. It's been tested out and we can see that it's holding up as support. Okay, so we've kind of got ourselves here 4 key tests on this lower trend line. Okay, so we have our first kind of 2 areas just over this side, like a double tap, and then over this side we have another similar kind of double tap situation, right? So we have ourselves with a pretty decent support level being found. Now this is just short of that 200 hourly EMA. Okay, that hourly EMA is currently set at 42,680 and is currently support for BTC. We have the 50 EMA and the 50 SMA, that's the red and yellow lines here. And again, price action at the moment is just above. Now, this has been a bit of resistance and a bit of support in the past as we kind of find ourselves in this ranging market. Now, at the moment, with our upper trend line here being a bit of a fake out situation, there's a couple of different ways that we can now readjust our charts to take into consideration this move. Okay, so the bulls are going to want to kind of take our trend line and force it into a move that will look more like this, right? We have a bit of resistance on this upper trend line just here, and it's going to be looking for a breakout, whereas the bears are still going to want to look at it more like this, which actually gives us a bit more room and a bit more headroom to the upside before we kind of see more moves to the downside. Now, all in all, there's still a scenario here that could unfold that allows us to think about Bitcoin's price rallying up just a little bit more, but it's already met those minimum expectations. Okay, so we know that this area, I'm just going to draw it up on the chart, it's actually going to be approximately here to here. This area has been historically major resistance. Now, with this move that we saw on the 5th of February, this move up to this upper trend line, here you can see that it actually rallied up through this previous area of resistance and then got rejected. Okay, so this actually tells us that this area of resistance is no longer valid. What was valid over this side is no longer valid over this side, and that's because we actually closed inside this range. We didn't just automatically get rejected. It means that the sell orders that were originally between 43,229 and 43,488 are no longer there. There's basically actually more demand than the supply could handle at this range. That allowed us to close inside this little box. It didn't last very long because we obviously still have a lot of selling pressure on this upper range. So a lot of short positions would have been liquidated, specifically as price rallied past 43,488, as that would have been a stop loss territory. From there, we did see the move to the downside, liquidating any longs who maybe leveraged themselves in as they broke above into that new local high, but we still hold pretty firmly on the low. There is a little bit of buy pressure right inside here, and I'm going to draw it in right this little range between 42,222 and 42,390. So there's a reasonable amount of buying pressure right inside this little range here. So we're going to keep a close eye on that and see if that can hold up. My expectations, though, are quite limited. I would expect us to kind of be looking for retest of the 200 hourly EMA at 42,680 and maybe a little bit lower, as our stochastic RSI is up in the overbought area at the moment. Now, we take this to a 4-hour time frame. You can see plenty of growth potential here. So if we are to see an hourly move to the downside, I think it will be short-lived and will continue a run upwards, where we will be looking at this upper trend line as the area where we are likely to see resistance. Okay, so we are going to now look at this as this triangular wedge pattern right here, and we will be looking for this to basically just coil up a little bit more and then break to the upside, in my opinion. And the reason for that will be that it will be the move that led into it that will continue out once we finish this pattern. So a move upwards, continuation sideways, and then break upwards. Okay, so that's going to be the idea here. So slightly more bullish maybe on these smaller timeframes than we are on the larger timeframes possibly. But for now, that's going to be where we're looking for. We're going to be looking for some coiling up. We'll move back down, and then I think eventually we'll get that bigger break to the upside. Now, it's possible that we break down, and if we do break down lower than the low down here at 41,884, then I think that's going to void the idea of a breakout, and actually is just going to confirm break down. Okay, so a couple of things to be mindful of as we kind of find ourselves stuck between the range of 41,884 and 43,882. Okay, cool. So that's your kind of 1 hour and 4 hour time frames. Let's go back down into that 1 hour time frame for a second here, because I do want to kind of throw on smart money concepts. As you can kind of see, our smart money concepts equilibrium is right sat down on here on the 200 hourly EMA, right? So we know that if there's going to be a test of equilibrium again, this is going to be the area that we're looking for. Lose this, we go down slightly deeper. Okay, on the 4 hour time frame, equilibrium is sat right up where we actually revisited. So yesterday's wick to the upside actually was testing equilibrium, and equilibrium has been major resistance for us on the 4 hour time frame. We also have the bearish structure, as you can kind of see right here with this change of characterization on the 4 hour time frame, telling us that we are still bearish for BTC. So it's all to kind of play for. I still see this as a continuation pattern ranging sideways. I will be looking for a break to the upside, but also look for it to stay inside its bearish structure, because overall I do think we are likely to see more moves to the downside, going down lower than the 38,555 that we already found ourselves on. Now let's move this up into our daily time frame. On our daily time frame here, guys, you can see that we are finding resistance on the 50 SMA. Okay, this is 42,948. 942. So 42,942 on the yellow 50 SMA. Now we are looking for closes above this area to kind of get, a bit more bullish action. Now, as you can kind of see here, guys, we've really struggled to get a closed position inside this range, 43,333 to 43,882. This particular area is an area where we found a lot of selling pressure, and that has suppressed us lower than the 50 SMA. The 50 EMA, however, the red line here, is the area of support. Okay, 42,119 currently. If we were to see the close position down lower than this, then we are likely to see further to the downside, in my opinion. Now, as you can kind of see, we're stuck in this little range, right? We can have the higher range where we find the selling pressure, 43,333 to 43,882, through to the lower range, which is where the buying pressure is, 41,884 to 42,580. So where the bulls are going to be trying to get a closed position in that upper range, the bears are going to be looking to try to close the price down in the lower range. Okay, so we're basically just kind of sitting on the fence here, waiting for a decision to be made by the bulls and the bears as to which direction is likely to unfold. Both of these are key areas, and the battle rages on between the bulls and the bears. One of these is going to win, and it is going to dictate the next big move for Bitcoin. Now, it could be something that spooks the market, whether that is the banking issue that I discussed yesterday, and we see the moves to the downside, or whether or not we actually see a big run to the upside, testing up that higher range as I first expected at 44,946 to 45,879, and I expected that this was something that we're likely to do probably about a month ago now. So we have kind of seen some pretty decent price movements in the kind of previous weeks. We found ourselves kind of stalling out over the last kind of 7 or so days, and we're just waiting for that market to make a decision. The bulls and the bears are fighting it out, and the decision is yet to be made. Hopefully this week we will find the the big macro direction that Bitcoin is going in, so that we can start trading it. There's a few clues maybe on the smaller time frames showing a potential move to the upside, but I think whatever happens here on the macro view is the one that is likely to kind of hold on out. Now, if I turn on smart money concepts, you can see that there's a lot of selling pressure just higher in the range as well. And otherwise, equilibrium is down towards our 200 daily EMA, and that is the range that I am looking for us to move down towards. That's $36,318. So we know that there's a lot of interesting price ranges lower rather than higher. So I am just going to be really cautious about thinking we have a lot of moves to the upside. I don't think we do. If anything, we can kind of push up more towards the 45, 46K range, or 44 to 45 in this particular case here. But for the most part, my expectations really are that we are to move down rather than move up on a macro scale. Now, from our stochastic RSI, you can see here that we are starting to correct on down as we start to see a little bit of volatility. And the expectation will be to take our daily stochastic RSI down into the oversold area. It doesn't have to, but I would expect it to do so. And we can already see that the stochastic RSI is already lower than the average of the smoothing line, which is R. And ultimately what that means is momentum has already started to shift down rather than continue to stay up higher. You'll notice that every time we have a significant cross between the yellow line and the white line on our stochastic RSIs is when the price is rather rapidly moving in one of those directions. Now, we have danced around here between the stochastic RSI and the smoothing of R. And yeah, we are still looking for this to move on down. Although it's had a little bit of volatility, it's still not looking too promising on the stochastic RSI point of view. Now, if I throw in the divergence indicator, you can also see that the RSI is actually tilting up a little bit. So the relative strength index is showing us with potential breakout to the upside on the daily. So that kind of 45, 46K range is a possibility on the RSI point of view rather than the stochastic RSI point of view. But we are only just above that mid-level. No divergences to be seen here, so we just want to be a little bit aware that for where we are at the moment, we are still looking likely, in my opinion, to see a bit of a move to the downside before we get any kind of decent runs to the upside. Volume profiles have been dropping. If I come and bring this back out here, you can see that during this entire sideways trading movement, we have just dropped the volumes down lower, as I can show you here. And that has been actually a pretty bullish and positive note, because as we kind of range sideways here, it shows that there's a lack of interest until Bitcoin is going to make a decision. So a little bit of volume or supply change can change this quite a bit. Leading into the move to the downside, volumes were higher, and as we started to recover to the upside here, volumes were also dropping. So it doesn't look like there's a huge appetite for pushing Bitcoin higher in price. It just looked like we, if anything, are likely to move on down from the volume analysis. But all in all, I think it's all to play for on the daily. We'll have to see whether or not the bulls and the bears actually can make a decision as to which way that market is going to go. Now, on our weekly time frame, I kind of spoke about this one yesterday. We can, of course, see that we are looking for diminishing gains over time. We started out with 52,000% in gains back in the kind of 2011 to 2013 runs. We then saw, of course, in the January 2015 to December 2017, we did see 19,000% in gains. And then, of course, most recently, we did see the 2021 high from the December 18 low being only 2,109% in gains. And so I kind of put it out there that we're going to see approximately 600% in gains from the bear market low to the potential peak. The potential peak of this next run, as I have curved out our line, kind of comes in at around $115,000 to $116,000. So from the current price, this is going to basically just represent about 155%. So you won't even double your money if you invest in Bitcoin at this point in time, or maybe actually go a little bit over double, I guess. So yeah, 2.5 times your money, I guess, will get you about there. But for the most part, it's not going to be a huge game changer for BTC and for people's portfolios, right? I know a lot of people speculate on, $500,000 Bitcoin or $1 million Bitcoin. And, this definitely is possible, but based on the historical price movements, we don't see that. And obviously, we do have to bear in mind what the Bitcoin spot ETFs are going to do to the price action of Bitcoin. We have to understand that the Bitcoin spot ETFs are basically allowing investors to buy shares of the Bitcoin that is held buy the ETF. Okay, so people can buy exposure to Bitcoin by buying the ETF shares rather than buying Bitcoin directly. Okay, so the billions of dollars that flow into the ETFs do not necessarily flow into Bitcoin. Okay, you are basically fractionalizing BTC outside of blockchain using an ETF. Now, the ETF in itself does have to hold Bitcoin because it can only issue shares on the Bitcoin that is held. So over time, the Bitcoin spot ETF will hold more BTC, but that's going to be a slow burning process. And so that could be a catalyst for supply demand imbalances that we haven't seen before. But I would expect that actually a Bitcoin spot ETF is going to be negative on the price action of BTC for the next bullish market. I don't think we're going to see the significant surge to the upside that so many people were hoping for. So I still kind of hold out and say, yeah, we probably are likely to tap out at around 115 to 120. We'll say that's a pretty safe area for BTC to kind of be looking for. But that's based on history. You know, lots of things can change, and ultimately, who controls the Bitcoin supply will control the Bitcoin price. And these ETFs could be just that, along with BlackRock and some of these large players. They are potentially going to be in the future the centralized controllers of the Bitcoin supply, and that could potentially be the end of decentralized Bitcoin as we know it. So, yeah, better the devil you know, I guess, in some regards. But that's going to wrap up today's video. Why don't you check out this video right here where I am discussing what is going on with the regional banks over in the US. It's a big problem. You need to be aware of it.